Let's just start off with the moves in the market over the last month or so. S&P down about 3% over the last month. In your mind, is this a viable dip? Should investors just be loading up on some of these stocks that are down, or is it a sign of maybe some trouble in the new year?
Yeah, I think we're seeing some volatility here. 3% dip, not sure it's screaming buy, but you should always be buying, right? Averaging into the market. So I think we're in purgatory with the markets. We got a new administration coming in. It's a big wait and see kind of month.
Should you always be buying? That's actually a question I think a lot of people are asking. Remember a couple of years ago we had the TINA trade. There is no alternative. Now, yields are starting to get a little bit elevated. And remember all that money in the money markets? Right now, I just checked, $6.85 trillion. Everybody said that's going to come out. Sure. That's going to be a big tailwind for the market. But it's actually grown over the last year despite the rally. In your mind, is staying in cash, staying in bonds, staying in money markets, is that more attractive than the market, the stock market right now because of the volatility?
For long-term investors, no. If you're investing over the long term, you're going to be begging for today's prices 10, 20 years from now, right? Whether it's a home or the stock market.
But even if you're a long-term investor, don't you need to make short-term moves, changes to your portfolio? I mean, even if you're planning for the next 30 years, you got a 30-year horizon. Don't you want to get in and out of some sectors or some areas just that are showing some weakness right now and maybe put money back in there later?
At the very least, the rebalance here at the front end of the year might be a good move, right? You've probably baked in some risk from outperformance of equities from 23 and 24. So you're heavy on those equities. You can cycle out to your fixed income positions or other areas that have lagged the Mag 7 or large caps of the world.
All right, speaking of the Mag 7, I want to ask you about this. This is a question I think a lot of people are trying to figure out.
Sure.
Are the Mag 7s, are they growth stocks? Is that the AI narrative that's going to push the market higher? Or are they defensive stocks? They could be both, I guess. But I want to look at the Mag 7 over the last month. I'm just kind of using the last month because that's when we started to see some of the weakness in the market. The Mag 7's up 3%. The market's down 3%. So what are the Mag 7 in your mind? Are you worried about the narrowness of the market? Are you worried about over-concentration? Or should we just be loading up on these because they just continue to work?
Yeah, they do continue to work now, don't they? Now, whether they're defensive, I chuckle a little bit, but they're saying that because of stability in earnings. You got basically dominance in the market. However, you don't have to go too far back in time to 2022 to see, what happened to technology and some of those Mag 7 stocks overall is pretty brutal out there. So I still view them as growth. If you're doing the AI play, you definitely are speaking to growth there. But they're strong. There's no doubt about that.
So I know you're always talking to the long-term investor. I know you're always talking about the long-term investor. But I want to ask you about some of the change in leadership we've seen to start the year. Energy being the leader, consumer discretionary being the laggard. It was consumer discretionary. It was one of the big winners last year. Should you maybe be allocating towards energy? Do you see a big rebound in energy this year? Oil prices rising as well. Should you maybe be putting money in healthcare after it had a really tough year last year? Is now the time to put some money in some of those laggards, or again, just keep riding the wave?
I view there being no issues with having a slice of your portfolio in sectors that you feel strongly about.
How big of a slice, though?
Talking 5% up to 10%.
So a very small slice.
Yeah, we're not talking, very large allocations to the hunches you have around sectors that you believe will perform well. But that 5% allocation to see if, your thinking's right, it's not necessarily a bad idea, but we're largely broad-based investors.
Let me put you on the spot. If that 5% you're talking about, where would you put it? Would it be healthcare? Would it be energy? Could it be small caps that are almost in correction right now? Where would you put it for the hopes of a big rebound in 2025?
That's a really great question. I come on here, I like digital assets. I still think there's an opportunity there, but I like energy. You've been talking about it. I think there's opportunity. If we do see rising oil prices, you're going to see appreciation out of the energy sector.